Alright, hi guys, so welcome to lesson 5. You finally got here. So at this point of time, we've covered the basics. You understand what it means to get a statistical edge in the markets with technical analysis, how to size your positions to get a good risk to return ratio. So now it's time to put it all together to understand what strategy to use. So remember, a strategy will give you specific entry rules and exit rules. And this first strategy is known as the impulse pullback strategy. M15 style. So first, a bit of background about this strategy. This strategy seeks to long FX pairs that have pulled back after just starting a new uptrend, and we're going to go short on FX pairs that have just pulled back after starting a new downtrend. So this is a trend following system that gives us the highest edge in winning in the markets. So again, like I mentioned, this strategy works best on 15-minute candles, or M15. And the average trade duration is about 6 hours or less. Okay? Now, of course, at times it may go beyond 6 hours, but definitely less than 24 hours. So it's a day trading strategy, but most of the time, you will be able to exit your position in less than 6 hours. You expect to find anywhere from 15 to 40 trades a month, and it works on all FX pairs. So pound dollar, euro dollar, dollar yen, dollar franc, Aussie dollar, dollar CAD, and so have you. Okay. Now, what's important is because we are using 50-minute candles, and most of our stop losses are going to be about 8 pips, with our target price about 12 pips or just slightly more. We must use brokers with tight spreads, okay, of 1 to 2 pips at the maximum. That's ideal for it. So if you use brokers with very wide spreads, 3 to 4 pips, it's not going to work. So I'm going to also suggest to you what are the best brokers you can use with the tightest spreads. So the whole idea of this strategy is to identify the beginning of a new short-term uptrend, a new short-term impulsive trend. So in this case, you're going to identify when a new short-term impulsive trend starts. We call this the impulse wave. The moment we identify that, we wait for a slight pullback. Okay, a slight pullback that always happens after a new trend starts. And what we do is then we place a buy order ready to catch the continuation of the trend. So we're going to buy over there and quickly sell there, catching our quick profits. At the same time, we're going to identify the start of a new short-term impulsive downtrend, like so. Wait for a minor pullback, place our sell order, catch the continuation of the next impulsive wave. Boom. So that's the whole idea of this strategy. So let's take a closer look at how we execute it. So before we go into the specific strategy, you've got to understand certain candlestick or candle price action definitions, right? So let's look at, first of all, an uptrend situation where we're going to go long. So when we're going to go long, we're looking for what we call pullback candles, okay? So what's a pullback candle? A pullback candle is a candle that makes a lower high and a lower low as compared to the previous candle. So for example, we are going to go long, right? So the direction is we're going to go up as the arrows imply. So what happens is we have got this candle that appears, and let's call this the swing high candle. Because let's imagine that as the price goes up, that's the highest high that we get right now. So after this swing high, we get what we call a pullback candle. So again, why is it called a pullback candle? Because it makes a lower high, right? Lower high and lower low compared to the swing high candle. So that's known as a pullback candle. Got it? All right, great. Now, it doesn't have to be a red candle. It could be a green candle. Doesn't matter. What matters is it makes a lower high and a lower low. Okay? Next. What's an inside bar candle? An inside bar is a candle that makes a lower high, but this time a higher low as compared to the previous candle. Okay, so once again, we're going up, it's an uptrend. We're going to go long and follow the arrows. We've got a swing high over here, And following the swing high, we have got an inside bar. Why? Because it makes a lower high, but it makes a higher low. So think of this as like the mother bar, right? And this is like the baby bar. And the entire baby candle is contained within the mother candle. And that's why it's called inside bar, right? Great. So do we understand that? Good. So that's for uptrend, long setups. Now let's go to downtrend, short setups. So again, on a downtrend, it's going to move down. So as the arrows imply, we're going down, we're going to go short. Okay. So again, on a downtrend, we wait for a pullback candle. So a pullback candle, again, is a candle in this case that makes a higher high and a higher low as compared to the previous candle, which is a swing low candle. So in this case, we're going to go down. It's a downtrend, and this candle happens to be the swing low. Why? Because it's the lowest point of the trend at that point of time. So right after the swing low candle, we see a pullback candle. This is the pullback candle. Again, why is it a pullback candle? Because it makes a higher low, and higher high. So that's a pullback candle. Again, it doesn't have to be a green candle. It could be a red candle. Okay? So color doesn't matter in this case. Yeah? Next, an inside bar. So similarly, an inside bar is a candle that makes a lower high and a higher low as compared to the previous candle. Okay, so once again, on a downtrend, we're going to go short, and this is the swing low candle because it's the lowest point in the downtrend at the point of time. So right after that swing low, the next candle makes a higher low and a lower high. So that's an inside bar. Once again, it's the mother bar, and that's the little baby bar. All right, so do we understand that? Okay, so please ensure that you understand this specific candlestick definition before we move on to the next slide. All right, so onward and upward. So now you understand the candlestick patterns that we are looking for. Let's go to the exact setup that we need to identify. All right, so we're going to identify a new short-term uptrend using the 6 and 18 exponential moving average, or 618 EMA, a crossover. Okay, so when we are going to go long for long setup, we want to see a new uptrend signaled by the 6 EMA crossing above the 18 EMA. So if you take a look at this MT4 chart, you can see that this red line is the 6 EMA, and the blue line is the 18 EMA. All right, so we're waiting for the 6 to cross above the 18. So you can see over here, we have that crossover right there. Okay. Now, we want to see an immediate corrective pullback after the uptrend. So the moment you see the 6 crossing above the 18, we want to see it move up and pull back. The candle immediately at or after the crossover signal is known as the swing high candle. Okay, so let me draw so you get a clear understanding. So let's imagine that we've got the 6 EMA and we've got the 18 EMA. Right, so again, this is the red line, this is the blue line. Now, so what I'm saying is right at the cross, so immediately right at the cross over here, we want to see a swing high candle. So what's a swing high candle? A swing high candle is a candle that makes the highest high relative to all the previous day's candles, right? So this is known as a swing high candle that must come right at the cross or right after the cross. So in other words, if it crosses here, this could be the swing high candle, or this could be the swing high candle, right? Because it comes right after that 6 crossing above the 18. Does that make sense? So this again, let me mark it as a swing high candle. Okay. So in this case, you can see that that's the cross over here. And where's the swing high candle? Right? That's right. This candle over here, this is the swing high because it comes right at the cross of the 6 and 18 EMA. Okay? Now, what is critically important is the next candle after the swing high candle must, I repeat the word must, make a lower high for it to be a valid setup. It could either be a pullback or an inside bar candle. All right, so in other words, right after the swing high candle, we need to have the next candle making a lower high. A lower high. And a lower low will create what we call a pullback. Remember the pullback? Okay? Or it could create a lower high, but a higher low, creating an inside bar. Whatever the case, it must have a lower high relative to the swing high candle. So in this case, let's take a closer look over here. We can see that right after the swing high, we have the next candle making a lower high and lower low, right? So this is known as the swing high and pullback candle. Got it? Great. Now, the moment you have got at least a pullback or an inside bar, you're ready to place your buy order. So we're going to place our buy order right above the pullback candle or the inside bar candle. So the moment this candle has been formed, now it's important that the candle must close. We're looking at 15-minute candles over here, 15-minute candles. So in other words, every 15 minutes, the candle will close. So you have to wait for the candle to close before making a trade decision. You can't make a decision while the candle is forming, all right? Great. So once this candle closes, okay, we're gonna place a buy order right above the high of this candle, of the pullback candle or the inside bar candle, all right? So the buy order will be, just above at a specific round pip level. Okay, so in this case, our buy order or buy entry is right above there. And what happens? The next candle goes above the high of the pullback candle. So it triggers our buy order and we are in the trade, we are long. Okay, and of course we have to put a stop loss. I'll teach you where to place the stop loss in a couple of slides down the road, right? But what happens is it triggers our order, we're in the trade, and boom, we're riding the trend up. Okay, and again, I'll teach you when we take profits in a short while, but just understand this concept. Okay, now let me just emphasize that it is very, very important that a swing high candle must come right at the cross or right after the cross, but not any candle later. Okay, so in other words, let me draw a scenario that is invalid. So let's imagine the 6 EMA and the 18 EMA, all right? Great, so this is the cross, right? That is the exact point of the cross. So say we have got a candle over here, and right at the cross we have got this candle. Okay, so at this point of time when the candle closes, you may think, okay, hey, that's a swing high candle, right? Because it's right at the cross. But what happens if the next candle makes a higher high, right? So if this candle makes a higher high, this candle now becomes a swing high candle, because a swing high candle must be the highest point. Okay, so is that valid? Yes, it is still valid because it comes right after the crossover, so it's still valid. But what happens if the next candle doesn't pull back? It doesn't have an inside bar, but the next candle, it makes a higher high again. Could this be the swing high candle? Yes or no? Yes or no? The answer is no. No, because the swing high candle cannot come any later than one candle after the crossover. So the moment the next candle makes a higher high, it's an invalid setup. So it's not a proper trade setup. We are not interested. We go on to the next setup. Make sense? Okay. So the next candle must make a lower high for it to be a valid setup, right? So we're gonna go up, down, continue the trend, right? If it keeps going up, it's not a valid setup, right? So in this case, it's a lower high, lower low. That's a pullback candle. This make sense? Great. So please understand this before we move on. All right. So let's take a look at another example. Okay. So in this example, we have got a long entry with two pullbacks before we enter the trade. Now, again, recall that in the previous example, let's go back to the previous example, we had one pullback. Okay, so right at the cross, we had a swing high, we had one pullback candle, and then the next candle went higher than the high of the pullback candle, hence triggering our buy order and getting us into the trade. Now, so in this case, it was one pullback for this entry. Now, in the next example, you can see that it is two pullbacks. Let's take a closer look. So again, what signal are we looking for? We're looking for the 6 EMA crossing above the 18 EMA, right? So we've got that red line crossing above the blue line. That is our signal that, hey, it's a new short-term uptrend. So remember, right at the cross or right after the cross, we must have the swing high candle. So in this case, where's the swing high? Is this the swing high or is this the swing high? Well, the answer is this is a swing high. Why is this a swing high? Because it makes a higher high than this high. So it has to be the swing high, right? Obviously, right? So that's a swing high. Now, right after the swing high, the next candle must make a pullback or an inside bar, right? It's going to make a lower high and lower low, or lower high and higher low, whatever, right? So in this case, what happens? The next candle indeed pulls back, right? Lower high and lower low, right? Now, the moment you have a pullback or an inside bar, you can place your buy order a few cents above that pullback candle. So in this case, where would we place our buy order? We place our buy order right above the high of this candle. Make sense? Okay. So what happened next? The next candle went even lower, so it did not trigger our buy order. Remember, our buy order is only triggered if the next candle goes higher than its high. But in this case, the next candle made a lower high. So again, a lower high and a lower low. So it pulls back once, it pulls back twice. So our buy order that was here is not triggered. So what we do? So the moment this candle closes, we will change our buy order and now shift our buy order to above the high of this candle. Okay, so we keep shifting our buy order till it gets triggered by a new high. Make sense? Okay, so our buy order is right above this candle's high right now. So what happens in the next candle? So the next candle, boom, you can see now it went above the high. So it triggers our buy order and we're in the trade, right? It's a buy entry. So we're in the trade and we are riding the trade out. Boom, really nicely, right? So in this case, we've got a swing high with two pullbacks. Once again, I'll show you in a short while where you exactly place your stop loss, where you exactly place your profit target and the kind of trade orders or the kind of orders to use to enter the trade. All right, so just understand the price action for now. Next example would be a long entry with an inside bar, a pullback, and another inside bar. So you can see there are many combinations. It could be a swing high, pullback, go. Swing high, pullback, pullback, go. Swing high, inside bar, pullback, go. There are many combinations, right? Okay, so in this case, let's take a look. There we go. We've got the signal 6 EMA crossing above the 18 EMA. Right at the cross, or right after the cross, we have our swing high candle, right? So can you see this is a swing high? Because it makes a higher high than the previous candles, right? That's a swing high. So the next day, or not next day, the next candle makes a lower high and a higher low. So it's an inside bar, right? So that's cool. So the moment you get an inside bar or pullback, we can get ready to buy. So we're going to place our buy order right above the high of the candle, right above the high of the candle. So the next candle, what happens? Does it go up and trigger a buy order? No, it doesn't. It makes another lower high and a lower low. So this is now a pullback candle, right? So it's swing high, inside bar, pullback. So what happens now? Now we place our buy order, we shift it from somewhere here to slightly lower above the high of this candle. Okay? So the next candle appears and it doesn't trigger our buy order. It doesn't make a higher high, right? It makes again another lower high and a higher low. So that's an inside bar of this candle, right? So what do we have here? We've got swing high, inside bar, pullback, inside bar. Our buy order is now over here. So notice that in this strategy, we keep shifting our buy order till it gets triggered by the market, right? So initially it's there, it doesn't get triggered, we go there, no, trigger there, no, right? So now here's our buy order. Now, next candle appears, boom, it goes above the high of this candle, triggers our buy order, we are in the trade. That's why we've got a buy entry over there, and we are riding the trend up. Okay, and again, we're going to take profit somewhere up there, stop loss somewhere down there. So some of you may ask, okay, so you're going to swing high, you've got to pull back, now. Is there a maximum number of pullbacks that I can accept? But I can't pull back forever, right? Yes, there is a maximum. So here are the rules for pullbacks. You should have no more than 3 pullbacks for a long position. But you can have as many inside bars as necessary, right? So no more than 3 pullbacks, right? You know, what's a pullback? Lower high, lower low, no more than 3 of them, okay? And the price should not pull back below the 50 moving average. Now, recall that the moving average acts as a support level. If it pulls back below the 50 moving average, game over, trade invalid. Next, remember that the 6 EMA crosses above the 18 EMA. To signal the swing high pattern, right? Okay, great. Now, so you see the cross there, right? The swing high must be right at the cross or right after the cross. Got it? Now, as it pulls back, if the 6 EMA crosses back below the 18 EMA, it is no longer valid. You have to cancel the order, cancel the trade, not valid anymore, right? So again, when is it not valid? It is not valid if the 6 EMA crosses back below the 18 EMA. It is not valid if it pulls back below the 50. So the 50 cannot be breached, okay? And it's invalid if you've got more than 3 pullbacks in a row. Sorry, not in a row. If you've got more than 3 pullbacks, that's it, okay? No more than that, right? Good. So now let's move on to the short setup. So for short entries, we're looking at the opposite. We're looking for a new downtrend signaled by the 6 EMA crossing below the 18 EMA. And once again, we want to see an immediate corrective pullback right after the downtrend is signaled. So over here, you can see the 6 EMA crossing below the 18 EMA, right? The red line crossing below the blue line. Okay, so that is a downtrend signal. Okay, and again, the candle immediately at or after the crossover signal is known as a swing low candle. So let me draw it for you. So again, imagine this is a 6 and the 18 EMA, right? So once you see that crossover right at the cross, okay, or right after the cross, we want to see a swing low candle. So this would be the swing low candle. So again, what makes it a swing low? It must be the lowest point in this new downtrend. So it's going to be lower than the previous candle and lower than the previous candle, for example. Okay. So what if the next candle makes a lower low like that? Is this still valid? Will this now be the swing low candle? Well, yes, it is still valid because it comes right after the cross. Remember, it must come right at the cross or right after the cross. But the next candle, if it makes another lower low, it is no longer valid, right? Remember, it's no longer valid because the swing low cannot come one candle after that. right? This can only come right after the cross. So the next candle following the swing low candle has to be a pullback candle or an inside bar. It has to pull back, making a higher low and a higher high, or a higher low and a lower high, creating an inside bar. All right, so it's the same thing. So once again, let's go through the rules so we understand it clearly. So right after the cross, okay, we have got the swing low candle. So this is the swing low candle. And it's a valid swing low because it comes right after the cross. It could have come at the cross, but it's coming right after the cross, so that's fine, okay? So what happens? That's our swing low candle. Now the next candle must be a pullback or an inside bar, right? Next candle after swing low must make a higher low for it to be a valid setup. It could be a pullback or an inside bar. So the next candle, what do we have? We have a candle that makes a higher low. I know it's really slight, but you can see a higher low and a higher high. Okay, so that is a pullback candle. So the moment we have got a pullback or an inside bar, we can place our sell order. And we'll place our sell order right below the low of this candle, right there. Okay, so the next candle, if it goes down, it triggers our sell order, we're in the trade. But what happens? The next candle doesn't go lower, it pulls back again. So we've got another pullback, right? Making a higher low, and a higher high, slightly higher high. So what do we do now? So now we change our sell order and we shift our sell order from here to below that low of that new pullback candle. So as it keeps pulling back, we keep shifting our sell order till it gets triggered, right? It's a sell stop order, okay? So it only gets triggered if it goes below the low of the last candle. So what happens? Our sell order is here. Next candle opens there, boom, goes below the low of this candle, triggers our sell order, that's our sell entry, and boom, we're in the trade going down, and we are very profitable, okay? So in this case, we have got a swing low and two pullbacks, right? So again, there are many combinations. You could have a swing low, one pullback, triggers. One swing low, two pullback, triggers. One swing low, inside bar pullback. So many combinations as previously, right? Here's an example. So once again, we've got the 6 EMA crossing below the 18 EMA. That's our downtrend signal. Right at the cross, we have our swing low candle. There we go, that's a swing low. Now, if the next candle makes a lower low, is it valid? It's still valid because the swing low comes right after the cross. Remember, right at the cross or right after the cross, but no later than that, okay? So that's our swing low. Now, the next candle, we need to have a pullback or an inside bar. If it keeps going down, it's not valid. So the next candle pulls back, right? Higher high, higher low. Beautiful. So we've got a setup. So where do we place our sell order? Right here, right below the low of this candle. So again, next candle, if it goes down, triggers our sell order, our sell stop order, okay? Does it get triggered the next candle? No. Then this next candle, what happens? It makes another pullback, right? Higher high, higher low. So what happens now? Now we change the sell order from here, we cancel this order, we place it there, right below the low of the candle. The next candle, does it get triggered? No, still not triggered. It makes another higher high, but same low. So we can leave our sell order there. So our sell order is still there, right? Next day, the price goes down below the low of these candles, triggers our sell order, that's our sell entry, and we are in the short trade going down. So in this case, we had a swing low with 3 pullbacks, right? Swing low, pullback, 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 triggers all the way down. Another example, this is one with an inside bar and a pullback. Okay, so check it out. We've got our crossover there, 6 cross below 18. Right at the cross or right after the cross, we have our swing low candle. There we go, that's our swing low candle. Why? Because it makes the lowest low, right? Now, next candle must be an inside bar or pullback. So indeed, we get an inside bar with a higher low and a lower high. So where's our sell order? Right below the low of this candle. That's our sell order. Do we get triggered? Nope. Next candle, it pulls back again. Another higher high, another higher low. So our sell order, we now cancel it and shift it below that candle. There we go. Next candle, boom, triggers the sell order, and we are taking the trade all the way down. That's our sell entry. Okay. So swing low, inside bar, pullback. Great. So here are the rules for pullbacks for short setups. Again, no more than 3 pullbacks for a short position. So after the swing low, you can have 1, 2, 3 pullbacks, not more than 3 pullbacks. Okay, more than that's not valid. And again, no limit for number of inside bars. You can have many inside bars, it's fine, but no more than 3 pullbacks. And again, it should not pull back above the 50 moving average. The 50 moving average is a resistance. If it pulls back above there, game over, trade invalid. Okay. Also recall that the downtrend is signaled when the 6 EMA crosses below the 18 EMA, right? So if it pulls back and the 6 goes back above the 18 EMA, you see a cross back, it's not valid as well, all right? So I hope you understand the long and short setups clearly. If you don't, please review the material till you get a clear understanding. And again, of course, you can send me an email anytime to clarify any of your doubts. So once you understand this, we can go straight into the entry rules and the exit rules for both setups. All right, so before we go into the entry and exit rules, let's look at what chart setup we need for this strategy. Okay, so my suggestion is to use an MT4 platform. I'm using one MT4 platform over here. Now, I personally trade with interactive brokers, but you don't have to use interactive brokers. You can use any other broker. In the lesson on, in lesson 8 in particular, I'll talk about the different kind of brokers you can use. And again, the broker you choose will depend on what is the minimum deposit you can place, what are the commissions you're willing to pay, and so on and so forth, right? So I use MT4 more as a charting tool, but I don't necessarily trade with MT4. In fact, I trade with interactive brokers. But if you are using interactive brokers, you need a minimum deposit of 10,000 US dollars. If you are a US citizen, you need a minimum of $10 million to trade Forex with leverage, right? So I'm not kidding, you can go read the website. Yeah. So I don't suggest you use interactive brokers unless you've got a really big account. In the US, you need at least $10 million to begin. In non-US, it's at least 10,000 US. So I don't recommend it for most retail traders unless you're running a big hedge fund. Okay. So for most people, I suggest trading with another broker where you can start a lot smaller, like $200 or $500. Yeah. Okay. So whatever the case, whichever broker you use, it's always good to use an MT4 platform. MT4 again is the charting software that most traders use. Okay. All right. So I'm going to show you how I set up the charts for this strategy. So for this particular strategy, we are just going to use 4 moving averages. That's it. Just 4 moving averages. And we're going to look at it on the 15-minute candle time frame and the 1-hour candle time frame. Right? So we're going to use M15 and H1. So we're going to primarily execute on M15. H1 is just for a higher time frame confirmation. So I'm going to go to M15 first. And what I'm going to do is I'm going to open up a new chart. All right, I'm going to file, new chart. And I can select any pair. So I'm going to set in the Euro USD. And once you select a new pair, notice you have got all the different tabs with all the different pairs. So for this strategy, it can be traded on any pair. So I've got all the pairs lined up so I can quickly look at the charts to see which one gives me that setup pattern, right? Great. So once you're there, what you got to do is you put in the indicators and the moving averages, okay? So first I'm going to customize it. So I'm going to right click again. Right click on the chart, go to properties. I'm going to choose a background, or rather color scheme, black on white. It's my preference. Okay, bull candle green, bear candle red. Oops, forgot something. Right click again, go to properties, common, change it to candlestick patterns, right? Candlestick patterns. Okay, there we go. So again, we can zoom in, all right, and we can go all the way to the right there. Great. So we've got a chart. Properties in place. Now I'm going to put in the moving averages. I'm going to insert indicators, trend, moving average. There we go. So we're going to put 4 moving averages. The first 3 are exponential. So I'm going to click on moving average. First one is going to be the 6 exponential moving average, 6 EMA, red, and I can click OK. Boom, there we go. All right, it's a bit thick. Let me change the shape. I'm gonna right click and go to properties. I'm gonna make it, yeah, I want a thin line, right? Thin line for the 6. There we go, thin line, great. Again, I'm gonna insert indicators, trend, moving average. Next one, 18 EMA, blue, thin line. Okay, there we go. So that's our 6 and 18 EMA. Next, we're going to put in our 50 EMA. Insert indicator, trend, moving average, 50. Now for 50, it's going to be blue as well, but it's going to be a thick line. It's going to choose a thick line for blue, for 50, thick line. There we go. That's our 50 moving average. And finally, our indicator, trend, moving average, 200. Now for this one, I'm going to use a simple moving average. Simple. Red. Okay, there we go. Okay, so you can scroll back and again looking for that setup. Doesn't happen all the time, but when it happens, it's really very powerful. All right, you can see over here, this could have been a potential setup. Let's take a look. Let me see, could it have been a potential setup? I'm not sure. Let's take a closer look. Okay, there we go. So you can see the 6 EMA crossing above the 18 EMA. Can you see that? So that's a swing high, right? So right after the swing high, you have got an inside bar, right? Inside bar, you could place a buy order there. Didn't get triggered, so we had a pullback. So shift the buy order down. Didn't get triggered, had another pullback. So inside bar, pullback, pullback, buy order will be placed there. Next day, or next candle, boom, it gets triggered. It buys and goes all the way up, right? So beautiful. You can see it's a very powerful strategy. Works very, very well. There we go. Okay, great. So once you've got your chart set up, you right click and you're going to save, or rather go to template, save the template. So save it as impulse pullback. Boom. There we go. All right, so it's saved. Oh yeah, do make sure it is M15. Yeah, sorry, it should be on M15. Right? Works best on 50-minute candles. Yeah. So again, so create tabs for all the different pairs, right? So you got all the pairs in front, right? So every time you create a new pair, just file, new chart. So for example, dollar yen, right? And just right click, template, load the template, load, impulse pullback, boom, there you go. Okay, cool. So that's how you set up the charts.